Okay, let's see if I can start off. G'day guys, my name's Sam. Uh, Sam from Melbourne, Australia. I've been doing a few video streams and I want to do a quick update on Bitcoin and what I think is going on. Looking on the weekly chart, there's a few key levels that we'll need to watch, and obviously the top level was resistance, and we've seen it from the previous week, and we closed pretty much the same level, and that was resistance. And looking at the bottom, we did close above this lower high, so we're slightly above, which the weekly is a positive sign, but I don't know how much we can celebrate that. So we did close above, slightly above, and this candle is neutral. So we've got the wicks on both sides, pretty much the same. Doesn't really give us much confidence in either direction at the moment, and so we've got this sideways range on Bitcoin. So this come Monday morning, we started this new candle for the weekly. So it's not giving us much clues, but if I was to bet, I would see downward pressure at the moment. So if I was to look at this RSI, we see downward pressure. Now let me get it clear to you guys. I'm not saying changing the market. I'm just talking about the local scenario or the local pullback. So we're not saying anything about the market. This is the top. I don't think it's the top. I think we've still got more to go up. But we're looking at what is a good entry, and are we going to drop deeper before we buy back in? Now the few observations I made, and I don't know if I spoke about them. I did speak a few of these observations. If you look at the market, the way we've been moving, we've been having nice rallies and a deep pullback, nice rally, deep pullback, nice rally, not so deep pullback, not so much nice rally, and a bit of a deeper pullback. So you can just for looking at it, you know you're running out of steam. Okay, so there's no surprise that we're running out of steam. This is, I mean, there's no surprise here that this is a bearish divergence on the weekly. Like, hello, it's not surprising that we dropped. It's a bearish divergence. The candles, the spikes going up is weakening, and at the same time, RSI is dropping. So we're losing steam. Now the question is, how many buyers are there to keep it going? It's dwindling. You've got to be honest. So a deep pullback will be nice for everyone. A deep pullback will initiate big buyers coming back in. At this level, you're seeing this sideways range. The big institutes aren't going to buy here. They're not. They're not going to push it up, and they'll be patiently waiting for the pullback. So there's a lot of things that tell you big boys aren't coming. This is just retail trying to push it up. All the newbies trying to push it up. Dumb money coming in, and that's my opinion. That we're not going to have the momentum to keep going. We need a deeper pullback, similar to these ones here. Each time there's a good pullback, we have a good rally, and all traders are looking for that. All the ones that are institutions and professional traders look for a nice pullback. So the dumb money will keep buying these dips, and eventually they'll run out. And we've seen it historically in the past, the same scenario, where the dumb money keeps buying it, the retail is buying it, and it drops. So currently, bearish divergence, and if I was to add my other tools onto it, let's see, just to make it a whole bunch of tools, and we'll get rid of that. So we see the MACD crossover. Can you see MACD coming back up? No. If it was, it would go sideways before it drops. Here, there's a significant momentum drop, and this is heading towards the 50% level. This is more reactive than the MACD, and so is this. Now we can see here with this Phoenix indicator that the momentum is on the downside. Everything is on the downside. So if I was to make this bigger, there's no surprise that this is going south. This is the weekly. Pretty previously the weekly that when it starts going southwards, it continues. The momentum's with it. And see all this grey area? Well, we just started this. So with this indicator, I'm convinced that we have downward pressure to continue on the weekly. When this green comes to the 50%, one tick in the box. When this red one comes down to the 50%, that's the second tick in the box, and that's for sure a deeper pullback. So that's on the weekly. If we look on the daily, so what we're seeing on the daily, a slight buy up, a bit of a trade here, buy up, and as I said yesterday, that price will always try to get back to where it was. And my weekly level here, that's the weekly level that I had, the resistance, will be the main resistance now. So if I was to use that number, so I'm using the weekly resistance, and now you can see its confluence with the daily, where it is. And that value is pretty much close to 60,000. Yep, 60,000, round number. Okay, $3 off. So price will try to get back up there. I would suspect on the daily that the 10 or the 20 moving average will be blocking it. Okay, so what we're having is now we're likely to see the 10 and 20 moving average cross over to confirm the downward pressure. Right here now, we have a nice green candle. We need another day to close. If you look on the smaller time frame, so this is going to be a quick update. It looks like a grind. This is not a strong move. So there was a strong move here, but now it's grinding. In my opinion, if I look on the 15-minute, does that look like a strong move? No, not to my thinking. That is the current resistance and the grind. And if we look at the MACD, it's actually going a bit south. So there's a bit of a bearish divergence on the small time frame. Even here too, bearish divergence. And so this grind that we're having is going to pull back down again. Okay. As I discussed yesterday, this looks like a local top, and that value, if we look back, let's have a look at what that is in terms of the RSI. Sorry, the Fibonacci level. So let's just get it out. Forgot half the stuff that I spoke about yesterday. So yeah, so the 0.5 Fibonacci level is acting as resistance, and that therefore it's going to be difficult to pass. And this is a grind, in my opinion. We need to break above this to even have a chance. Anything that bounces and doesn't bounce above the 0.5 is a dead cat bounce by definition. So what we need to see is price hit this level at least, pull back to the 0.5. And at the moment, a dead cat bounce doesn't make 0.5. Okay, there is a chart that I have that explains that. It's on my website. Let me just save this just for the time being. I'm going to come back to it. Just going to quickly go to my website. Where's my dead cat bounce? Here we go. So this is what a dead cat bounce looks like. 50% retracement. So when price drops, it finds a support level and it needs to go and it hits a 50% retracement and then it makes another low. So at the moment, that's the scenario that we're playing out. Okay. So 50% retracement, and that's where we are at the moment. So let me go back. So that is our 50% dead cat bounce retracement level. So if we have the day, a 4-hour close, another 4-hour close, another, and if it's an 8-hour, let's see the 8-hour. Even the 8-hour is showing a bit of a pullback on that wick. So yeah, the 0.5 is a strong resistance at the moment. So it's a weak rally currently. And this is a grind, as I said, on the 15-minute. And we've got 3 touches, and it's probably a good time to short. What I'm going to do is I'm going to currently get a small value trade in there. I'm going to leverage high, so if I lose it, big deal. And if I get anything, even better. So I'm going to short this right now with a small amount of money. And if I lose it, big deal. Having high leverage, risk to gain ratio is high. So I'm just done. So I'm shorting. I'm shorting with a high leverage at this point. I do believe this is just going to come down back to this level, what we have here. Chances are that's where we'll find support. So in the local trade. Moving forward, as I said yesterday or early today, we're going to range in this area. So this is really, so what we had is a bounce, A, B, C. We're looking for the next bounce somewhere around here. It's going to go up. I believe it's going to go up. But if it isn't, I did talk about my buy zone yesterday. And that's somewhere here. Look at my post, it's there. Definitely, I did an update post where my buy zone is. I don't want to go into that because I've already done that. So we're looking for sideways movement here. I believe this is going to be pulling back slightly, and then test this area again. Test this first one, and then potentially test this bottom area, and see if there's still buyers. And that comes across from examples here. So when we have, let's see, one here, we have a nice pullback, just as nasty as yesterday's one, real deep pullback. We had the bounce, that's the second bounce, third bounce, and then we went down more. So that in that scenario, I have a buy order. So I'm looking for this scenario, will be positive. And then in some cases, it doesn't really go one more down, it just goes up. But we didn't have this wave, 1, 2, 3, and then 4. We didn't have this wave at all. So having a direct fall usually requires another bounce down. So that's my thinking at the moment. We had a direct fall. We had one bounce. We didn't have we need another bounce down to be tested. And it will be around this area. So when I say around this area, I think around this area we'll have that test like that, and then we need to have a lower high, and potentially one more here, and then up we go. Okay, so if you're going to buy, look for potential scenarios like that. That's a bullish scenario. The other one is we just go down lower and then a higher. So that there is 2 scenarios that could likely play out. And then we're going to come back up here, this area, for a retest. And I think if we're lucky, it might come up to this level and then pull back. If it comes up to this level, it's definitely a bullish market still. Even here, it's still a bullish market. But if we don't even pass this and we just pull down, that's crap. But that's my opinion at this point. Looking at the chart, Bitcoin, and let me just delete all that. Those are the scenarios that I'm thinking that's playing out. So shorted here, potentially first bounce here, and then up again. So we're going to see a fair bit of sideways motion. In the meantime, the likes of the alts, some of the alts have lost their big momentum, and their lower highs are not there, so that we've got a lower low, and those are the alts that you need to avoid. You need to, if you're going to trade in your alts, go with the alts that have the trend that is still up. So if I was to pick say I'll pick Sol. Sol's always doing good. So you can see Sol did not lose its trend. So while Sol's doing this level is still a lower high on this one. So Sol is another one. So it's a good one to keep an eye on because the trend hasn't been broken. For anything that's really capitulated like this, you need to see past this level, its base level, before you get interested in trading it. So there was, what was it, Carver? Carver, you can see Carver, if I put Carver on a bigger time frame, Carver lost, it did what Bitcoin did. It's pretty much a wedge. It first got its first target based on this level, and good time to short. I was actually looking to short that, so I did well on that one. I forgot about it, so I was shorting it just by this formation. Yeah, Carver. So what it's done is this is a low, and this is a high. Now we did not make a lower low, so Carver is still in a nice position for lower high. So it can, long as it keeps this level and rallies up, and then it might just do this triangle type of thing, each lower high. So each lower high will give it a chance to rally. So this Carver could potentially continue on with its market, but you need to look at the trend and the lower highs as progressing. And so that's what I have for now. If we look at the total market cap, this was yesterday. It recovered, really. It's right back up there, well, above that trend line. So hold on, let me fix that trend line. I don't know why it moved. It could have been because of the log settings. Yeah, okay. So the total market cap is all right. It's nice, even though we lost a lot of money. It was a $7.6 billion drop. The bounce recovered, and now the market cap is back above this trend line. So what's likely to do is it will retest this level, and hopefully it stays above it. This is I think if the market cap drops below this, then we're gone bearish market. As long as we're above this trend line on the total market cap, we're still in the bull market. We need a line to keep reference to. This is the second level. So we haven't even, so we dropped below it, but we haven't even tested it really. So it was a quick rally. So this level will be if it was a drop, this level will need to pick it up. As I said, if this level is broken, then we pretty much we can say that confirmation that the market's over, and then we're going to start doing the bear market, but we're nowhere near it. Okay, so that's another point to make. And let's look at Bitcoin dominance. Let's see how that's going. So yeah, there you go. So Bitcoin dominance is dropping again. So they're also having a better session. Some of the alts have gone, continued on. If you pick the right alts. Now let's see where it is. Come to that line I had. So that was the bounce there. And this is the real line that I'm looking at for Bitcoin to give a good response. So when Bitcoin dominance drops down to the 50% really, 50, close to 50 to 51. And you can't put an exact line there, it's too difficult. It's not an exact art that you can pick a line. I'll just say roughly there. And that is 50.19. All right, that's my line. So we can see Bitcoin dominance still needs to drop further for another a real test. If the scenario is that, yeah, hold on, we get these bounces and then Bitcoin dominance drops, that's fantastic for the alts. So this was the alt market. Anything below this was the alt market. And there's a few bounces in here, small bounces, but this is, as long as we're above this, I mean below this, it's still alt season. So for this, and the reason why we have that is pretty much head and shoulders. So if the head and shoulders was the real deal, actually it's from this side, sorry. Head and shoulders on an angle. And if this was the head and shoulder range, we can measure the target for Bitcoin dominance. Okay, so that might be the range for Bitcoin dominance. That's its target. And if I was to draw a line where that is, ballpark figure, that will be it there. And I can see that there is support there, resistance there. So it has confluence. So Bitcoin dominance target is about 46, 47% based on this structure. And along the way, there's going to be bounces. So the alt market's not finished. So I'll take my words back. For some coins, it is. The ones that are probably will take longer to reaccumulate. The ones that dropped the structure and back to the accumulation area. So Bitcoin dominance is in favor of the alts at the moment. And let's go back to Bitcoin and see what it's doing. Short time frame. Yeah, so the grind is still happening. If you look at it, yeah, it's just grinding. This is a grind, not nice. And you can't understand why it's a grind. People aren't confident, pretty much it. And long as it's a grind, if it's not like these bounces and it's a grind, there's no momentum. So it's going to, even here, it's just a little local one here. It's likely to drop, bounce here. Oops, what do I do? Where am I? Here we are. So even looking at the small time frame, this is likely to drop here and then continue on. And I did say that was our major resistance. So this grind is going to grind all the way to here, to this red section that I must have identified in the past for some reason. Yep. Okay, I done it early yesterday, so all these lines are based on yesterday and my post. And so that grind is going to hit here and then drop. If we drop deeper, it gives momentum. It's a spring. So think of a spring. Okay. The more you press this down, the more momentum it's going to be in the spring. So the more you push this down, the more any power it's going to be within the spring, and then up it goes. That's the analogy I can only explain why dropping is good. And I think you might retest that wick, and I think it will be sideways motion and potentially one more leg down, and that'll be nice. So as I said to you yesterday, I'll be having my orders around here. I might just average in there and then and big leverage there, and hopefully hit this blue line. This red zone is a strong resistance, and we can pretty much look at that. And what I said yesterday was it's because of these Fibonacci levels. Okay, and we had historical resistance there, resistance there. So what was historical resistance isn't going to be, it's not going to change. It's going to be historical resistance. If it was a good bounce, a stronger bounce, then we could see it coming up to this level here, which is this Fibonacci level there. And I think that's where we'll stop, roughly there, if the really bullish scenario. And then I think it's going to come down, not dive, but slowly come back down. This area, pretty much. And let's look at that. I'm not being bearish, I'm just being practical. And as I said, I am still bullish, but I'm also very well aware that this is not significant highs from the, like, look at this, right? From here to there, that's a big 40% move. From here to there is a 6% move, and then we still have pullback. And from there, it's pretty observable, is a 5% move, and we had a deep pullback. Can you see the momentum? There isn't. It's forcibly pushing it. We need that deep pullback, a nice deep correction, and the market will continue on. I do see something here. I don't think it will go down this deep. Actually, it really depends on, as I said, how high this goes. If this goes higher, then it won't go this low. The higher it goes, the minimum, the lower highs will be higher. So, and then we can measure that. And this is a good example here. All right, this one here. This is a nice example that will potentially what can play out here. Excuse me for a sec. I've got to attend to my little daughter. Give me a sec. What do you want? What do you want? Okay, so what is it? Yeah. I'll just put that system. Okay. Right, I'm back. Just had to attend to my little daughter. So this type of formation, and you can see here, here's another formation, which is the inverted head and shoulders, and this one's pretty much, this one was really testing, and it had a few layers, and you can argue it was a wedge. Okay, so we can expect something there as well. These all formations with deep pullbacks gives you the momentum to go higher. However, here's the other point I should have made. The reason why we're having, and this is my belief, I don't think many people talk about it, this level here is the real issue. This is a real challenge here. I don't know if it's related to the bots and their programming, but to me, this is the real challenge. And it's simplistic. I hate to say it, but it's my theory. And I've mentioned it a few times before. That resistance level is a Fibonacci golden ratio, 618. It's just 100,000 and 61,800 is the golden ratio. So this is a fake out. That's my theory. That round number was the first reason why we got rejected, right on 61,800 and something. This was forcibly trying to force it up and rejected. So I think to pass this line is going to take a fair bit of effort, and it could be something that needs to be a deeper pullback before we get there. So to break a strong resistance, what we tend to see, so this is a strong resistance, and this is our golden ratio up there. What you tend to see is with a lot of charts, the first doesn't even make it. Yeah, the first attempt doesn't even make it to that level. But what you see is levels of building, and then when he hits it, the first one is a rejection, big rejection. It's always the first one's always the biggest rejection, and that was it there. So that was the biggest rejection right there. So that was the first one, and then it rallies up again and gets a second rejection, and it should have dropped, but make a lower high. But in our case, he didn't make it there. He actually didn't get there. So we didn't get the touch. We pulled back, and then we got that second touch. And realistically, it wasn't enough. We needed a rejection, a healthy one. It was a third one, third touch. And we need to see this grind. And sometimes it turns out to be a triangle. That would grind away that 61,800 and whatever it is. And you can see it's a golden ratio. So if we had that scenario, we'd have been in a good position. So what happened was we had this, a little pause there, and a dump, a fake out, and then back down. So that is a fake out, in my opinion. And you can listen to all the news and all the rest, but this is classical chart behavior. And so what you tend to see is 1, 2, 3. Okay, this is a strong move. And we didn't have that. We didn't have a decisive move. And it's trying to show that this was the 1, 2. We didn't have it. There was no decisiveness around it. It was a grind. So if it's a grind, it should. That's why you're going to have a fall like that and a fake out. So what you want to see now is something like that. Grind away, eat away at this level, and I think this is going to start. So this was the first part. This is the second. So we don't want to see it really drop down this level. So if it stays here, then we have a lower high. So that was our lower high. That was equal to it. What we want to see is price still continue on. Even if it pulls back, we still want to see it go up and then pull back. Okay, that will give me confidence that we're going to eat away at this level, this 61,800K level. So this is my theory. We just need to see this work its way up. Now, if price drops down here, well, it doesn't look good, does it? I don't see how it's going to eat away at this. unless it's some other type of formation, then that could be all right too. Yeah, and then that could be a bigger macro structure to break away this level. So that is always at the wrong time. Okay. So that's my thinking. A few scenarios, but I think all of them are justified. So this level is significant. It's a golden ratio, 61,800. This was a fake out, and this is a grind the way we did it. And this is a wedge that is clear. So the wedge's first target was there, the second target there, and maybe the third target is there for an uptrend wedge. Okay. If it does come down here, then that confirms that that was a wedge, and I don't think it will ever go lower than that. So what we'll do is we'll see a bigger macro structure come in play. So if price was to come down, it could be the likes of, where are we? That will be A, and then B, C, D, and E. Then we can have this big structure eating away at that. So there's a few scenarios that I'm thinking. If price was to come down here, and if it doesn't, that is this is the bullish scenario, like that. So that will be the second point. If price doesn't drop below it. So looking closely at it, and let's look at the 15-minute, what it's doing. Okay, so it's still there. Just eating away little by little. I think it's going to drop just down here somewhere, and then which is fine. So we've got 1, 2, 3, and drop somewhere around there, and then start again. Best scenario is that we hit there and then we drop, and then we'll see what takes place here. I expect some reversal structure coming in play, and that's pretty much it for that. And the last one I'll cover is Ethereum. So let's look at Ethereum on the bigger time scale, on the day for the time being. Ethereum is more bullish than Bitcoin, in my opinion. There's a few structure you can argue what's taken place. One of them was the Livermore structure, and I'm not dismissing it anytime soon. It's still possible, that Livermore structure, and I've put a post or a video on it. The other one is, so if I just hide those two, just temporarily, if I was to get where is it? Get rid of the log doesn't help. So if I start from here and I connect the bottom, okay, and I get my channel, bring it there, along that line, we have that right, that fits perfectly, hence resistance. So this is a channel, and if we put our support lines on this one, so we can see clearly there's a good support line here, and you can see the wick touch that support line based on previous resistance, which was part of this structure, this triangle. We hit the target based on this structure or based on this channel, really. So I'm going over yesterday's wording. That was our target. Actually, if I count that wick, yeah, so just a bit too much on it. So from the breakout, retest, and then hit the target, equals that channel. So Ethereum looks good. Okay, that was Ethereum always responds. I suppose it responded equally to Bitcoin and probably performed better. Now there is definitely a few scenarios that can play out with Ethereum. One scenario is that it does drop with the likes of Bitcoin and test this channel before it goes up. Right? That's one scenario that I can see play out. The other scenario is, and they're all good. So we've got this area is our short-term resistance. With this pullback, we can have this fractal. So if I was to grab that formation, and just stretch it out a bit, we might play that out, where it just dips out, touches that channel, and continues on. So that's possible. And the last one, let's put the Fibonacci onto this, and let's see what's telling us with the extension. So if we do that, if I was to pick there, swing high, swing low. It's actually there. Okay. So that sort of makes sense there. We had resistance there. So this fits the Fibonacci, 1786. If I was to move this somewhere else, so if I was to use this local one, give me a sec. Where are we? There. And I'll get the local one. And I'll see this one here. You can see from there, swing high, swing low. We hit the value of 1, which is fine. So that confirms that's another resistance justification. And if we were to do from here to the bottom, I can see Bitcoin, Ethereum pretty much going up to 3,000 with a 1.618. So there's a number of reasons why we can see it going higher. And we could see a number of reasons why this was resistance. So I am bullish on Ethereum. I do think we're at a stage where, like Bitcoin, we're gonna see some downward, establishing another support base based on previous ones, and then moving back up. This could be inverse head and shoulders or something, or a triangle. Could be any structure that is a reversal, another reaccumulation structure, and up it goes. So that is my thoughts on Ethereum. And so there's two. I'm more leaning towards it coming down, and this layer will be tested. This is the buy zone, in my opinion, because here you can't see anything that's significant to support. Yeah, Fibonacci is there, but can you see any prior compact candlesticks? No. So I can't see why this is going to stay up. This is where there was a lot of volume, and we can use a volume indicator just to demonstrate. So let's get that out. Actually, I didn't talk about volume, did I? So let's look at volume along these lines as well. So fixed volume. If I get the fixed volume, and if I apply it to that little section, that is telling me that little red line there is the support level. If I was to get that fixed volume again and apply it to this structure, all the way here. So we have it slightly lower, the volume there, okay, which equates to this. But I don't think that's going to make any use. And if we were to apply volume to the whole outfit, volume, which one was it again? Visible range. And let's play with the settings on that. Can we do 100? Better add these. And I'll make that 100 as well, just to make it granular. And you can see the majority of the traffic, based on this, that was the concentration of the volume. So that is our support level. Okay, and the next band of support volume was here, that level. So I don't think it's going to drop that far. I think this is the strong support level, definitely. So having that level right there, oh, sorry, give me a sec. What we do is we pick the top of that volume, and that equates to that level there as support. So if price was to drop, that's the area that where the most volume was, and that it sort of equates to, at this point, the channel. So if this was a drop, this is definitely the area to buy. But we have this short-term area that might work. So we might have and we did have it. We had a bounce from here, and it might grind to this level with a few bounces. So that's the bearish scenario, and then grind up. I see that happening potentially. So if you're patient enough, you might place your orders around here. And if you want to do the quick ones or small short trades, pretty much where we are now. And I'll go back to Bitcoin. I just want to see one. I forgot to look at the volume. What's the volume on Bitcoin? So let me just clean all that up. If we start on the daily, you can see here. Concentration of volume there. And if I bring that across, so that equals, we have from 50,000, 46 to 50,000 of significant volume. And then the next volume down is here. It starts. So this is the first obstacle, and that's probably the most likely area to have support. And when we did the Fibonacci on that level, didn't we? So we did that, and that turned out to be the 0.5 level, 0.5 Fibonacci. So we hit the 0.382. How likely is this to continue on? Well, here's an interesting observation. Is this the new trend line? That could work, couldn't it? Just for the short term. So we had another trend line. So our initial trend line was this. And once it was broken, and we had this one as well, as support. So what we had here, there, and resistance, and that was our support line. Once this was broken, and once the other one was broken, people said exit. Yeah, we get out, and that's why it dumped. Now, we could possibly have a new trend line just by that fact there, and that could be a very bullish scenario. But we need to watch that. Let's see if this price holds and keeps going. So if we do see one or two bounces here, that will confirm that this line exists. So what we want to see is a bounce and a bounce. Two bounces on it, and then it will potentially go up. So that I'll be looking for that to see if it's a new trend line. So there's something different there. Didn't think considered before. So that's potential. That's one to look out for. So in terms of trading, it's not going to help you in the short term. It's a matter of waiting and just observing. You be patient. Don't just jump in for whatever reason. On the small time frame, you can probably trade small trades. But right now, for putting your lump sum money in it, you need to wait. You need to see what the chart gives us, what clues it gives us. At the moment, there's no clue. It's just trying to survive above this point, this fib level, and that's all it's trying to tell us. So it's actually slightly above. So if we look at the bottom of these candlesticks, price is slightly above it. So let's look at 15-minute. What is it doing now? I'll get rid of the trend line. Oh, so that's it there. Hello, sun. And here we go. There's a bit of a, as I said, a bit of a grind, and that looks like it's going to drop. And I'm $12 off. I'm $12 on the short, so I've made $12 so far with that little move. But I'm looking to short to this level here. So my little trade there. That's my little trade there, and I think it's going to come down to this level, and that's what is it? It's a small trade. Doesn't matter. I'll take it. I'm bored. I'll take that trade. And anyway, there you go. Because I'm watching it, so I might as well trade it. And you can see the volume here. Yeah, that's why this level was support. We have a volume of concentration of buyers selling. So that's one aspect. Now let's look at on the daily, and I want to see the other volume profile. Let's see where's volume. Okay, let's look at the weekly. Actually, I'll get another. That's Binance. I'll get Coinbase or Bitstamp. Which one's better? Like Coinbase with the dollar. So now we look at this volume profile. As we get towards this top, you can see volume dropping off. So that doesn't help. So that, as my initial, remember I was talking about that we're seeing a grind, a wearing down, and weakening of momentum. This volume tells it, doesn't it? Like you can see, volume is dropping. When you look at the previous one, the market there, from there to there, we had a big spike in volume. As we're getting to this height, we're actually getting a drop in volume. So we need to see a pullback. A pullback will basically get the people that are selling and waiting to put the money in. So how far can that go? Which historically we were talking about the 20 moving average on the weekly. So this is the weekly chart. If I get that out, we can see how the volume is just coming down and coming down, and the weekly is indecisive, that candlestick, and we're just above, like I said before, just make it above, and we haven't made really low highs. It's equaling the low high there, and yet we have the wick, and we have also a major resistance here, as we said. We can also argue that we're having a triangle working out. So is that triangle going to be bullish or bearish? I'm leaning towards bearish at the moment. So we might go like that and then drop to this 20 moving average. The 10 moving average has been tested already there. And I did speak about historically what that means. So if we go just justifying it in the previous bullish bull run. 20 weekly average was always touched 3 times. Here was the 10. Here's the 20, 20. The last time we touched it was down here. We never touched it again. So it's due for a pullback, and this flat level is telling us it's going to happen, in my opinion. So you should be cashed up a bit. You might find your exit strategy up in this level. I would. I am looking to take another third out. And if I look on the 4 hour, so that's my reasoning to take some money out. I think it's going to drop. Nice healthy pullback. And I can get rid of the 20, crunches it up a bit. So I'm just going through the logic. So there's a few possible scenarios, and we need to look at each scenario. What I tend to do is have a model and look at the scenarios that you potentially can play out, and when it does get there, it's a tick in the box, and then you don't react. You plan according to your strategy. So when things are dropping or things are going really high, and you haven't thought about it, then it becomes very reactive, and then it's unprofessional because you can fall into a trap. But when you play this roll out and go, okay, this scenario A, scenario B, scenario C, when you think about things like that, you're not caught by surprise, and you respond rationally, calm. And that's why I'm talking about the scenarios. I'm talking about the reason why this is a ascending wedge, and why this is the first target, second target, and potentially the third target down here, which equates to the 20 moving average. And the justification for the pullback, I think, is there. What we want to see is, it might not give it to us, but what we want to see is price come back up to this level, or even to this level here, and get rid of the coins. Just sell them. If it comes up to there, I would sell them. But what you do is, from a strategic perspective, you look at the lower time frames and you find your exit. So because you don't want to just assume it's going to be resistance, you want to make sure it is resistance by a number of rejections. So if I was to give you a lesson, I'll give you a lesson here, for instance. So there's a 4 hour. You can see the rejection, that look how many rejections or touches that we had as price came to this level. On the 4 hour, we had 1, 2, 3 touches before pull back down. And it's likely to happen here if it was to get to that level. So don't forget, we're coming from a bearish perspective. Prices really dropped deep. It gives us a business case like these ones here. And you can see how this one came down, really down, and then further down, and it stopped there at the 50% level. And it's got 2 touches on the 4 hour, and then went down. So I would look for either this spot to exit some of it, and then if it comes here, exit more. That is my strategy. And so what if I miss out? So what if it goes up a little bit more and it still comes down? I'm still cashed up for the next level. That is for now. In the coming half a day or the next day, if things change, I'll change my mind, and I'll react to what I see. At the moment, this is what I see, and this is how I'm responding. I'm looking at this volume. So there was much more a drop than a volume buying. So currently there's not much volume in that bounce. You would have expected if people are really interested, there should be a bigger spike up here. So the volume tells you a story, but it's not enough. It's not. We also look at the levels and the structure. So I think that's it for me. It's meant to be a short presentation and look at my post where I think you should short, and I'll leave it at that, guys. So please give me a tip, a like, a share, and a follow, either way. And stay tuned for the next video. Maybe I might do one tonight or tomorrow. I'll try to make them short and just keep you guys up to date. And me doing so, thinking it clearly, also helps me benefit. So have a nice day. Talk to you soon. Bye.